Most fucking Mayfair back. First of all, big congratulations to everyone that still uses the MFX scalper. We now bring to you MIG Liquidity Edge. It marks a high probability reaction zone, areas where price is statistically more likely to bounce or reject. Think of it as a decision framework. It tells you where you should be interested, where you should not, where your risk is clean, and I'll just give a very, very quick tutorial breakdown on exactly how to use this. I use it as a 3-step process. Effectively wait for price to approach and tap a liquidity edge zone. A confirmation is then a rejection wick, perhaps a clean displacement candle, or a close away from the zone perhaps, and then I place my entry there. Easy. Stop just beyond the zone boundary, and then I target either the next logical liquidity level. For example, if we're going in for these sells, we're waiting to come down here into this huge liquidity area. Before we get started, now Bookmap and Sierra show you the raw order flow, liquidity visualization, heat maps, DOM, footprints, absorptions. Liquidity Edge is different because it compresses all of that information into actionable, practical areas. You already trade with Bookmap, Sierra. Liquidity Edge just works as a clarity layer, prevents you from overtrading, allows you to hone on that focus, reduces screen clutter. Okay, so what we'll do is just cut through and go straight into a breakdown, settings breakdown, exactly how to use it. So breakdown is really easy. In regards to the components that you actually have on the indicator, you can actually see control and dominance inside each zone, the buyers and sellers. So that basically looks like this area here. If I actually change the lower time frame source, so let's say 5 seconds, I can actually get a better breakdown. You can see a much better breakdown on those buyers and sellers dominance. We also do have our stop loss and sell limit entries that will show on the most recent ones. My main rule of thumb is looking at the chart immediately, especially if I'm on a lower time frame. I'm effectively just trying to take, this is the area created, I'll take my sell limit, place it above the last high wick, and then look for anything below. That's just as an example. On a lower time frame. On a higher time frame, if we actually go to our market open 922, this is how I personally use it. I'll go over to the 5 or 15 minute time frame. We'll just delete this. 5 or 15 minute time frame. Make sure that I'm on 1 minute so I can get a full breakdown on the actual charts. There you go. And now what I'm looking for is, this is on the 15 minutes, by the way. It's at 9:15. So what I'd be effectively doing is placing a limit order here, and then placing one as for a more conservative entry. I'm actually placing one off of any wicks that I actually see within that area. Okay, you can actually go into settings here and change your guide limits. So for example, I can change it to mid, and that will move my buy limit down, as you can see. I keep mine at aggressive, nice and easy. It's, it's literally that easy. But on my going into pre-market, I go for my 5 to 15 minute time frame. Look for our area that's been made up. You know, this would have been a very aggressive, risky trade. The only reason being is because you can see 62,000 here, and then you have that London collection here at the bottom of 544,000. So on an ideal day, what I would have actually been looking for is taking this entry here. The beauty is we already knew we were on an uptrend. Taking a risky trade going in is very nice. Now, let's say you missed that first entry, okay? Let's go back. Let's say you missed that first entry. You haven't lost the trade. I'll show you what I mean. So let's wait for that first push. This was our first push. Now on a lower time frame, on our 1 minute time frame, what we're looking for now is another zone to be made. I missed one. Here's another zone that's made. I'm looking for any of my entries within this area. I'll place my stop loss just below here. That way I can catch a trade and I haven't missed out. Okay, so even if I did miss that original 15 minutes, for me to continue into that trade, all I'm looking for is another zone to be made. Price taps in and we send it off. Now on the Discord, we've actually shown a full quant breakdown. If I can find it. If not, I'll just post it up onto the screen now. Our best settings were going for a 1 to 4 on a 1 minute time frame. In fact, we have this up here now. Okie doke. So it was this model here. On a $50,000 account, 96% return. What we found is 1 to 4 was the best. We had a 15% buffer into the area for entry, 5% buffer into the area, 15% buffer for the stop loss at the base. Okay, but we keep it nice and easy. Let's go over to gold to provide you an example on gold. Go to 5 minutes, head over to, let's say, London. Let's place a limit here, let's place a limit here. As you can see, really nice strong tap in. Okay, we can move our stop loss into profit. I'll go down to the 1 minute now. That was from a 5 minute entry. I go down to a 1 minute to see my take profits. Okay, look how perfect this breakdown. On a lower time frame, I look for my exits. Okay, my higher time frame, I look for my entries. Okay, so what I'm looking for is, this was the 5 minute entry, and you know, I could have taken one take profit over here, and then the next take profit over here. Also, I can see this is 1.2, 1.5, 900. The highest amount of volume that actually prints will be the strongest zone for us. Okay, and that would have hit break even. If not, you would have seen here. So if we go back, in fact, our first entry was here. Let's go back. We'll come here. Look for a wick inside our area. There's our buy. Wicked in. Go down to my 1 minute. Look for the highest form, which is here. And we're out. It genuinely is as simple as that. Really nice sell momentum. We also have the London high, okay, alongside that. Really nice tap. Again,